Hi, this is Mohan Kumar from Brainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for May 4th, 2023, and see what kind of entry and exit signals the strategy would have given us. Let's have a quick look at the charts. Perfect. So we have the two view chart in trading view. So the Nifty spot and the Nifty futures chart, both these charts are set to a 3 minute time frame, right? So before I bring the indicators on, let's look at the price action for today. So it had a flat open, almost a flat open. On the futures chart, you could see a slight gap down, but no, it is not a significant gap down though. But post the open, the price swiftly moved to the higher levels, and it was a trending day today. As you could see, there were no dips, there were very minimal dips. There were just a bit of consolidation, as you could see, um, you know, right here, right, and there was a consolidation right here, and then there was a quick move to the top towards the end, right? So let's quickly bring these indicators on, and let's look at the chart with the indicators. And let's analyze the price action in conjunction with indicators. Let's also look at the kind of entries and exits the strategy would have signaled us. Okay, so let me quickly remove these drawings before I turn the indicators on. Okay, so we have the trend meter, we have the locations, and we have the participation, right? So these three custom indicators I've discussed, about these indicators in many of the videos, right? So these indicators are built to be placed on the Nifty 3 minute charts. So it's all custom indicators. They are not available out of the box in any charting platform. So the locations indicator has the key locations, like I've discussed about what these locations are, right? And then we do have the participation as represented by these dots. So we have three dots: the blue, green, and the black, right? And finally we have the trend meter indicator, which indicates the strength of the trend, right? How strong, how weak, whether it is actually completely bottomed out, or is it like peaked out, and is it going to be any reversal, or is the trend going to continue, right? So all these can be derived out of the trend meter indicator. So these indicator, they all have equal importance and significance. Not one indicator is important than the other. So all these three of the indicators, along with the price action pattern, right, the moving averages, the candlestick pattern, gives us the entry signal and the exit signals as well. Okay, so let's look at the same chart now with the indicators applied, right? Now you could see the price opened between two major locations, which is the previous day high and the central pivot range. And look at the moving averages since open; they have been moving higher. They're all widespread and right, and you could see the price swiftly moved to the previous day high, and on the spot chart it is at the previous day high, but on the futures chart it was a slight gap down, but quickly it moved above the central pivot range, right? And then it actually retraced back to the central pivot range, as you could see. But on this particular chart, it is still seeing some kind of resistance around the previous day high, and there is also a daily resistance. So this is not the right point for us to get into a trade, because we have multiple resistance levels, and at the same time the trend meter is almost like pretty close. So we're quite not sure as to which side the market is headed towards, right? And we don't trade between 9:15 and 9:45. But as you could see, the price quickly moved above the previous day high, right, and the resistance, indicating that the trend is very strong to the upside. However, on the futures chart, you could still see that no, the price has not passed over the previous day high, so there is no trade yet, right? And as the price quickly moved, there was no retracement to the moving averages, or the price actually, it was a slow grind to the upside, right? So there was no entry signal, at least on this particular chart. You could see the trend meter, it was kind of like in a neutral, right? It was neither sloping upside or sloping downwards. Rather, it was kind of like stayed in the middle. But on this particular chart, you could see the trend meter was moving into the red zone, right? But does this trigger a short, entry? No, because look at the moving averages. It just crossed above a major location, which is the previous day high. So the price will have to actually, go, retrace back, make a double top, right? Or it should actually, show some kind of signals at a key location for us to take a short position. Having said that, the risk to reward also is the most important factor. So there is no scope for short position right here. Is there? And the price is at a location right here on this particular chart, but still, the price has not shown any weakness since open. It is very strong to the upside. It is just that we do not have a right signal for us to, take a short or a long entry. At this point, when the price moved above the daily resistance 2, right, which is the second red line that you see here, right, it retraced back to the blue moving average. But on this particular chart, you could see, it retraced back to the blue moving average, but you do have the resistance right here. So do we have a long entry? We do not, because there is a resistance point and there is no reward. So, and we do not take chances, right? So we need to have some kind of scope for the price to move and give us some kind of profit. So there is no entry here either. So we still wait. And as you could see, the price was kind of consolidating, and the trend meter was kind of around the red zone. But quickly, this one candle actually, rose like about 30 points, right? And quickly it moved higher, and it was a breakout of this particular resistance. So do we have a long? No, because this candle is so high, and you have another resistance right here, and there is another resistance right here as well. This red line, right? Third resistance. So there is no long entry here either. And also look at the trend meter. It is close to the red zone, so we do not get into long positions when the trend meter is near the red zone, right? There is no, and the price started to consolidate, as you could see, you know, on both these charts, the price started to consolidate. And since morning, the trend has been to the upside. It has broken multiple major locations, right? So on this particular chart, it moved above the CPR, then above the previous day high. Then it broke the daily resistance 1, 2, right? On this particular chart, you could see it's broken the previous day high, daily resistance 1, 2, and it's almost close to 3. And there is no significant participation pushing the prices down, right? And plus, you have the moving averages, moving higher. They're all wide spread and wide apart, right? And you could see there is a bit of a participation. It's not a major location to consider, and we cannot get into a short position because you have the trend is to the upside, right? And you do not have that kind of momentum to steer through all these moving averages. And as I've discussed in the videos, in other videos, once there is a breakout of a particular level, in this case the daily resistance, the price will retrace back to that level, right, before it actually moves back, and then it shows weakness, and then we take a position which will break this level and go further down. So there is no scope for short entry because the reward is not great, because this level could act as a strong support, right? And besides, you have the moving averages, as you saw in this in the previous low point was here, and the support was this blue EMA. So when the price retraces back to the blue EMA, now the price might again see some kind of reaction, and this is where we would look for our entry. Considering the entire price action, it was a long wait, right? And there was no entry whatsoever, because the strategy simply gives us signals based on the price action, and today's price action was kind of slow grind to the upside. It was not volatile. It was one-sided. It was directional, and it was a trending day to the upside, right? So this consolidation gives us a lot of signals, as you could see. While the price was consolidating, the trend meter actually gave us a clear signal that it was actually now moving downwards, but the price was making a higher low while the trend meter was making a lower low, right? As you could see. Now, this is a price trend conflict that we have discussed in many of our videos. And today, it's a trending day to the upside, and this slide to the downside where the price is making a higher low indicates the weakness in the downward, movement, right? And look at the moving average. It was right at the blue moving average. The price actually broke out and moved past this particular resistance. And when the price retraces back to the same moving average, that is when you could see a lot of reaction. So, as indicated by both of these charts, where the trend line is right in the midway on this particular chart, and we have a price trend conflict on this particular chart, right? And with the price actually consolidating, and then it's actually slowly moving towards the moving average, right? The blue moving average, and you could see this particular candle right here, this hammer candle coming off of the blue moving average, and that's closing above the volume candles right here. Now this is going to be our entry. This is going to be a stop loss, and you would hold on to this particular trade as long as the price is above the green moving average. And our target is going to be the first target is going to be this. If the price is going to see some stiff resistance here, right, we would book up profits, partial profits, and we would trail a stop loss to the green moving average. But if there is no stiff resistance right here, if the price keeps moving higher, because the today's trend was like to the upside since the open, so we're going to ride along with the trend, and we're going to book profits at this particular resistance level, right? And it's past 3 o'clock, so this is where we would try to book our profits. So the trade worked in our favor. You could actually see it was a big move, right? And this was the only time the trend line actually clearly indicated a dip, right, to the mid the midway mark, right? And also the location was really great with a lot of participation coming in, and you have the all three conditions met, and you're taking advantage of the current day's trend, and looking at the price action. Now, this is where you would actually take your chance, right? The probability of price moving further down is very low, but the probability of price moving higher is more likely considering the current day's trend. Hence, you went long, and you are not surprised, right? So we took the trade based on facts. So this exactly how we read the charts, we read the price action, and then we actually uh, take into account the signals given by the three indicators, and in putting everything together, right, we then actually clearly see which side the market is headed towards or has more chance, right, to actually give us better rewards, right? So in this case, it was to the upside, and it was a wonderful trade again. Like we would always see the risk to reward. So this is like I think it's more than 1:5. Let's have a quick look at how much could the reward be, right? So this was the candle right here, and this could have been. This is the stop loss. This is our entry right here, right? And this was our exit. Now just look at the kind of risk to reward. The stop loss was 15 points, right? And the reward was like close to 70 points. So it's roughly about 1:, I would say, 4, close to 1:5, right? It was a long wait since the morning, but it was the best trade. That's exactly how the patience come into play. One of the three pillars is patience. You need to have that patience to wait for the right setup to form, and you need to actually have that kind of mindset. You should be mentally prepared enough to take up the trade after a wait of 3 hours, right? Since the morning, 3 to 4 hours, right? So it was a great trade towards the end of the day. So this is exactly how we plan our trades, and we do not trade based on guess or a hunch. We take trades based on pure facts, and it's the facts are purely based on technical aspects. So there's no news, there's no fundamentals. We don't look at anything else apart from these two charts, and we clearly make decisions based on the price action, on how the market exhibits behavior, right? And then we actually execute our trades. So if you like this content, please do like this video and subscribe to my channel to get timely notifications on the new videos I post. And I have formulated a wonderful course, right? It's called the Triple Threat Intraday Strategy course, right? And if you would like to know more about the course, please to reach out to me on my WhatsApp or email ID that's on the display. And I've actually made a couple of videos about the topics that will be covered in the course. It's purely going to be based on the strategy. So every topic that will be covered is not a generalized content. It's going to be keeping the strategy in perspective, and whatever is required to actually get you started with the strategy is what will be discussed, right? Even there are topics related to charting platform, so I would be discussing about the technical aspects which are required, right, to actually use the strategy effectively, and how to use the TradingView platform, right? And how to actually place orders, what kind of orders you have, you will have to use for this particular strategy, right? And regarding options, what strike prices to choose, which day, what strike prices work better, right? And all of those will be covered in detail. So it's an end-to-end course targeting beginners and experienced traders. It's going to be a private session, one-to-one session, right? That way, I could tailor the content based on your expertise in the stock market. So please do reach out to me for more details. And until I get back to you with another episode of Nifty chart analysis, it is bye from me, and take care of you and your loved ones. Thank you for your time.